Welcome traders to yet another educational video of weekly sectoral analysis. I think the last video which I made was a Nifty short-term view on 7th of June, and after that this is my latest video. And the reason for not making a video was very simple. There was nothing much to share, and I had clearly told in my last video that the overall biasness in the market is certainly on the downside. And along with the biasness, I had alarmed and I had shared one more thing with all of you, that even if market decides to come down, it will not be just one way down. It will be volatile, and it will be like one step down, again a step up, again two steps down, again one step up. So basically it's going to be in bits and pieces. And the major reason for this was support and resistance, because if you see, there is a pretty big support band over here, and there is a very big resistance band on the upside. And generally when markets are locked in a range, all right, whenever markets are locked in a range where there is a lot of resistance and support, it is very difficult for any market to move one way down on the downside. If you check hourly charts, generally I don't pick up hourly charts in the weekly sectoral analysis, but if you see clearly, this bounce, because this is a short-term support, right? So this bounce from 16,297, or you can say 16,274 till 16,496, this entire one-day bounce back came exactly from this particular support. Even this day, even on 8th of June, when we had a pullback, an intraday pullback from 16,311 to 16,547. This is a humongous pullback which happened on intraday. And this pullback also came from the exactly same support band which I had shared in my Nifty short-term view. And now one more thing which we can see is that the overall prices from 7th June from 16,431, we are certainly lower, but again we are at a support band, and this support band is from 16,258 to 16,150. So I believe the overall biasness continues to remain down, and again, yes, we certainly have a trend line breakdown in RSI, but I guess we need to close below 16,150, 16,100 with a pretty decent big red candle, all right, which reassures the bears that they are in control of the market. Then possibly we can assume that markets, Nifty futures, will head lower. If you check in the weekly time frame chart also, there is a very clear cut sign that last week we had a sort of inverted hammer, which is a shooting star, and this week we do have a red candle. So this reassures that the biasness is on the downside, but we certainly need to break this particular support band and close lower. Only then you will be able to see some sort of negative move on the downside. Bank Nifty futures. Now Bank Nifty futures, if you check in the monthly time frame chart, it is certainly flat. We are nothing else but consolidating in the long term. We are consolidating in the monthly time frame chart. If you check Bank Nifty futures in the weekly time frame chart, you can see exactly prices have taken resistance from the resistance band which I've drawn over here, and prices are moving down, but we do have a support band on the downside also. See, this is exactly resistance band from where prices took supply couple of times in last few days, and prices have managed to come down. Now, if you check over here, there has been some sort of activity before many days, and a lot of zigzag movement has happened. So I guess this particular small band should work as support for Bank Nifty futures from 34,301 to 34,245. So until and unless this support band is not broken, it will be difficult for Bank Nifty futures to go down. But once we close below this and sustain below it for a couple of days, I think prices will head south. Okay. Let's have a look at the PSU banks and the private banking chart. In the private banking chart, if you see, again, the prices are trying to go down. The biasness is on the downside, but I can clearly see some sort of support coming up at lower levels, and that particular band, in fact, it is a band, this entire band from 50% retracement to 61.80% retracement. This entire band should work as a very strong support. And the reason for that is, I believe a lot of sideways move, a lot of consolidation has happened. So I believe in private banking stocks, a lot of volume would have been generated between 17th May to 26th May for sure. So once we close below this particular support, we will be able to see a confident move on the downside. And in private banks, I guess there is one stock which I would like to share with all of you is Axis Bank. Axis Bank has been one of the banks which has been able to, come down pretty swiftly. You can see somewhere over here. Overall, it is still in a downtrend, I believe. This particular hammer, I think it is not a very strong hammer. But after the hammer, we do have a spinning top. So this is a sort of, you can say, question mark where the price actually wants to go. According to me, if the bearishness wants to continue, it will need to stay below this. Prices will need to stay below this particular resistance band, which if the stock does, then possibly you will see prices heading downside. And the resistance band is between 669 to 668. So as far as the bearishness is concerned, prices should not close above this particular band. If they do, then I think the bearishness which has been created in last few days, in last 3 to 4 days, I would say, will be nullified, and you will see some sort of consolidation or maybe a small pullback. But if this doesn't happen, if this particular level is not taken off, then maybe within few days, slowly and steadily, you will see prices grinding down on the downside. Now let's have a look at the PSU banking stocks. The biasness in the PSU banks is also on the downside. You can see the trend is currently flat. There's a very big red candle over here, which reassures that the bears are in control. But just by one negative candlesticks or maybe couple of negative candlesticks, no one can say that the entire trend has changed. You can clearly see there are a lot of hefty supports here and here. So first move which is necessary for the bears is that they should be able to close below this. Once you will get a close below this, some sort of downside move will happen, at least to the starting point of this particular support band. So first thing is we should be able to close this below the support band, and this support band is from 2550 to 2519. So possibly close below 2520 or 2519 will be reassuring for the bears. Metals. Now let us have a look at the weekly and the monthly time frame chart first. The monthly time frame chart is certainly not looking very, very attractive because we have seen a breakdown over here in the uptrending channel, and there has also been some sort of negative divergence, although this negative divergence is not very, very powerful, but yes, it does exist. In the weekly time frame chart, last week I had clearly told that there is some sort of positive divergence present over here. So we would wait and watch and see what happens. But after this positive divergence, there has not been a very, very positive move on the upside. You can see there was a slide of pullback, but this pullback was not able to, converts itself into a very largish pullback. Instead, I would say this was just a mere small pullback, a consolidation, and then a drop in the price. Now, if you see the last candle over here, it seems like a small hammer or very, very small hammer. If this is a very short-term pullback, it should get over within next 1 or 2 days, and then prices should try and continue down. If you don't see any major down move happening in the next 2-3 days, then maybe it seems that prices would like to consolidate probably even further in next few days. All right. Now let's have a look at the auto pack. Now this particular sector has been one of the sectors which has been very, very outstanding. If you look At the monthly time frame chart, it is in an uptrend. In weekly time frame chart, also it looks pretty impressive. But one thing which I can see, yes, the prices are slightly away from the moving averages, but it's okay. I guess in the current market scenario, at least it has been able to stay afloat, stay at higher prices, which is a very big deal in current market scenario. I think some sort of consolidation, some sort of sideways move, if it does happen in the auto pack, it would be good for the sector, I believe. And in terms of stocks, there are two stocks which I would like to share with you. First one is Maruti, and I'd shared a small information on Twitter handle, on my Twitter handle also, that I'll be sharing the same in my weekly sectoral analysis, and this is what I'm doing right now. So we can have a clear look that we do have some sort of ascending triangle formation in Maruti. Why? The reason for that is we have higher lows, but the highs, if you see, are almost at the same level. So generally when there is a triangle where you can see higher lows, but the highs are almost at the same level, it is like a symmetrical triangle. And apart from this triangle, if you check properly, if I just zoom out in this stock, there has been a lot of sideways action in this zone. Then this same zone has been able to provide resistance one and twice, two times. So I believe if there is a very good, decent candle, a big green candle closing above this particular resistance zone, which is above 8200, or you can say somewhere around 80 to 80 or 80 to 50, then there is a decent chance that this particular stock could head higher. But just understand and remember one thing in this particular market, all right, where prices are extremely choppy. If you see Nifty, Bank Nifty, recently the markets have been very, very choppy. So generally in a choppy market, even good trades go for a toss. Even good trades at times underperform. So I would, tell you to not to overburden your portfolio with this one particular stock. You should try to trade possibly 50% of the position sizing of what you have been trading recently. And the main reason for that is overall way market is moving, which is very, very choppy, because in choppy markets, we all of us know it's very difficult. Even recently, I think even swing traders, even intraday traders are facing difficulty to generate returns as they used to probably before a year or before few months. So let's be practical. And yes, one can initiate longs in this trade above the close of 80 to 50 or 80 to 80, but the position sizing should be should be reduced by 50% of what you have been doing. The second stock from my side is Hero Motors. So in Hero MotoCorp, you can see very clearly that overall stock is looking good. It's looking fine. It's not as positive as Maruti, but it is looking pretty good in terms of a swing trade. So once we do have a pretty big green candle in Hero Motors, something like this, probably above the zone of 26-25, then I think chances are this particular stock could head higher. But just be careful that I would advise you that not to initiate this particular stock in option trades. Try to trade this in cash market. The reason for that is there is some sort of resistance in this zone. All right. So at times what happens if you buy a call option and if the price faces some sort of resistance, and if there is some sort of time decay or a sideways move, what will happen is your premiums will decay and it will be difficult for you to come at the break even and make some money out of it. So if you're buying in cash market, then even if there is some sort of sideways move and after that sideways move of couple of days or 3 days, then the prices start going higher, I think you will be in a comfortable position. So use your own trading system, put your appropriate stop losses. And this is not a call, this is just a view from my side. And I hope this particular stock view, which I shared about Maruti and Hero Moto, will add value to your analysis also. Let's move on to the next sector now. The next sector is finance. It is very clear. I think I don't even need to speak that overall finance sector is looking very, very negative. It's looking weak. And you can see the way it is moving. I think very soon, if this momentum continues, we'll be able to test this recent lows which we had in the early May or mid-May. All right. IT pack. Let's have a look at in the monthly time frame chart. I think what is happening in IT is this particular zone is trying to provide some sort of support to the IT pack, since overall IT pack has retraced by 38.2% Fibonacci retracement. And if you have a look in the weekly time frame chart, there is a pretty decent hammer over here. RSI is at the oversold level, and from there we had a decent up move. But I don't think so that this up move was pretty decent enough. I think we should have got much bigger candle, or maybe at least couple of weeks more of pullback, but that is not happening. And sometimes, markets just have their mind of their own. So I believe it's very difficult to comment on any stock in IT, but one stock which I saw was TCS. It's consolidating right now, but if it manages to close below 33.40 or 33.30 with a strong red candle, some sort of down move could be expected in TCS. Pharma pack. Pharma pack, if you look at the monthly time frame chart, it is overall certainly consolidating and sideways. And in the weekly time frame chart, the trend is down, but you can see this is the first hammer, then a bullish bell hold, again a negative candle, again a negative candle, and then again we have a doji over here. So I guess there is some sort of support which is getting built over here. But what we need to understand in the daily time frame chart, although we have a hammer, again a second hammer, then again a bullish bell hold, how long can this particular pullback continue? Maybe just 1 or 2 days, or maybe higher. So whenever it starts going higher, somewhere around this zone, we will need to see that whether it wants to consolidate or some selling pressure is evident in this particular sector. That is what we need to check. All right. In the finance pack, in the FMCG pack, this is one of the sectors which is extremely outperforming. We can clearly see in the monthly time frame chart that it is in an uptrend. There is certainly no doubt about that. In the weekly time frame chart, I think it is consolidating. So overall stance, overall biasness is certainly on the upside. It is not on the downside. But I believe in the medium term, it requires some time to cool off. It requires some time to consolidate. So I think whenever we have an upside move, whenever we have a short-term upside move in FMCG stocks, I think we should look for swing trading, especially swing longs, and try to initiate the trade in cash market rather than in options or futures. The reason for that is the overall current volatility in the market. Realty pack. Realty pack, if we have a look in the weekly time frame chart, trend is certainly down, and you can see a decent pullback which happened over here. But after this pullback, there has been a resistance over here, and after it tested the resistance, it immediately fell off. All right, there was an immediate sell-off. But this immediate sell-off, after this sell-off, when the pullback happened in Nifty futures before a few days, especially on this 9th June, what has happened over here on 8th and 9th June, we can see consecutive green days, and then we have a inverted hammer or a shooting star. So question is Realty pack really willing to come down even further? So for that, we need to understand, and Realty pack needs to close below the recent lows. If that is possible, then yes, again, the negative biasness will be re-established in this particular sector. Consumption pack. Consumption pack, let's have a look at the monthly time frame chart. In the monthly time frame chart, the trend is certainly flat. In the weekly time frame chart, the trend is down, but if you see, the candles are all over the place. We have one positive candle, again another positive candle, then we have a negative candle, and then again a positive candle. So I believe I wouldn't like to comment anything on a type of sector which is not sure where it actually wants to go. I would stay away from the sector and I would probably move to the mid cap index. In mid cap index, again in the monthly time frame chart, there has been not even a single candle which has been closing below this 23.6% Fibonacci retracement. So possibly a close below this would be sounding a trouble for mid cap stocks for sure. And in the weekly time frame chart, we can see that there is a inverted hammer over here and then a negative candle. So in the daily time frame chart, this is a very big candle. This is not a small candle. This is a very big candle, and overall biasness certainly seems on the downside. But I guess we will need to close below this particular support band, which is from 27,466 to 27,380 to 383. Once we have a close below that, we could move slowly and steadily towards this recent lows. And if we can close below this 23.6% Fibonacci retracement and these recent lows, then I think mid-cap stocks could be, beaten down very, very badly. Trust me. All right. So I hope this video has helped you in understanding how the overall markets might move in the next few days. Understand one thing, the overall biasness is still on the downsides, but until and unless the support is not broken, it will be very difficult for any trader to generate returns. And if you have any queries, you can just post or comment below my YouTube video. I'll try and answer that, right? Trade well, trade less, stay safe. Thank you.